as an attendee in listen-only mode.
Welcome, John Smith. I hope you attended Avrami's grand webinar yesterday. It was so good. I mean, I think the responses are amazing. And I think we all attended and we learned a lot. So great to you guys who actually took part. Okay, so let's wait a while more for more people to come in. Hi, William. Welcome. William, you're a bit late today. Just saying. Welcome, welcome. Good morning. So I was saying, Sichun is actually busy. He actually was sick today, so he's not in office. So I came in last minute to take over the webinar, and I'm going to share on Avrami's slides on trend lines, speed lines, and channels, but I'm also going to put a bit of my own input in it. And you guys, I hope that you guys can learn something from him. And also you guys can put it in your own trading and benefit from it. Hi, Son, welcome. So who here has actually attended the webinar? Okay, we wait a bit more, then we can start. Yoke, always so positive. Thanks for your response. Yes, yesterday was so good. Hi, Son. Welcome. I'm sorry I'm not Sichun today. You'll hear a girl voice instead of a guy voice. Okay. Hey, why you call me you? I'm Angelina. Angelina, you. Yay. Okay, so I'll be starting right now. Okay, so today we're doing trend lines, speed lines, and channels. So what do you guys know about trend lines, speed lines, and channels? Do you guys use it in your own trading? No worries. Okay, no worries, San. Don't worry about it. So, okay. So what we'll be learning today is actually obviously trend lines, how you draw trend lines, and then how trend lines and channels. Trend line and channels are similar in a sense that they both shows you the momentum of the price and whether it's an uptrend or a downtrend. And it's quite a good measurement to when it's in alignment with your Fibonacci's to find good entry or take profit points, right? And then linear regression we'll cover later. And also we'll do trend line degrees. It sounds a bit cheap, but actually it's quite simple. I'll try to explain it in the layman terms. There's a more professional way to say it, but I'll try to simplify it for you guys, okay? And then there's speed lines. So all this would assist you in actually helping you to find the right trend, the right entry points, the right stop loss, and also the right take profit points, okay? So later after the session, we will go through a few charts to, you can actually put the charts that you're looking on, and we can do live analysis of whatever charts with this channels, trend lines. My favorite is price patterns actually. And yeah, so we can go through that later. Okay. So trend lines. What are trend lines? Trend lines are basically just lines. So wherever there's a chart, we'll always talk about lines, right? So in primary school, we learned that to draw a line, usually you just take 2 points. But trend lines is built on the assumption that prices either move up or down. So even if prices are consolidating horizontally, we will say that by right, the trend line is horizontal, just straight. But for price charts, we want an upward trend or a downward trend to actually tell us whether to buy or sell on the chart. So trend line is used for identification and confirmation. And then if there's a breakout from the trend line, we can use it to sort of confirm with more chances that, this might be a sign that the trend is actually changing. And the next strategy that we might be taking, we might be going from a sell to a short to a long, or we can go from a sell to a buy, or whichever strategy you're actually putting in place in your trading. Okay, so uptrend. Uptrend is just when you see that the prices are making higher highs, right? So usually for uptrend, we'll actually, let me draw this with a pen. Okay. We actually usually when we draw uptrend, we take the bottoms and we draw an upward trend. Okay, so you can see that, yeah. So uptrend. So for stronger trend lines, we try to make more touches. And for EFG, where I was taught, right, is actually that we try to find minimum of 3 touches, and potentially the wicks. We try not to cut the candles. The wicks, I mean, in between, sometimes it's very hard to fit in. We cut it a bit. It's fine, because wicks can be because of spread, because of fake outs, because of smaller movements, that it does not affect the trend that much. Or like when you draw trends, if it's on a bigger time frame, small fake outs might be actually just a tiny wick on the larger time frame. So for trend line, what we remember is that candles, we definitely try not to cut them. Wicks, potentially, if we cut a bit, it's okay, but we try not to cut as well. Then we try to join the tips together to form the trend. So the more touches there are on the trend line, the stronger the momentum and the trend line is. So you can see that there's, later I'll show you, there are some trend lines that can be valid for a very, very long period of time. And if you actually caught the tips and enter for a buy or sell, right, it's actually potentially a very good trade. Okay, so for downtrends, let me remove this. Okay, so for downtrends, so for uptrends, we take the bottoms. For downtrends, right, it's the opposite. We take the tops. So we'll draw, actually go down, right? And then, yeah, so the few points, the same thing, the more touches there are, the stronger the trend line is, and which means we can extend the trend line to actually predict the movements moving forward. It's going to be downtrend. There's going to be more touches on the trend line, and potentially when we use other tools like Fibonacci or indicators to assist us, and the strong descending trend line can be a further confirmation of whichever entry that we pick. So later I'll show you how you make use of the trend line together with maybe Ichimoku indicator or together with your Fibonacci's to actually find the right entry or the right exit levels. Okay, so next. Okay, so the thing is, the degree of the trend line is sort of important. So why is this important? Because the best ideal situation actually we're looking at is 45, but we know that prices cannot always move in. Prices cannot always touch at the same. So we cannot always expect prices to go on 45. So there may be a very steep sort of trend line where you join the dots, or there might be a very less steep. There might be a very flatter sort of trend line. So what this tells us is that the trend line, so the uptrend is strong or is very weak. For a very steep trend line, this might not mean, okay, so for very steep trend lines, right, it might mean that prices are actually, the push is very strong. So the pressure is very strong. So if there's actually a fake out, we will have more, we will think that the prices are more likely to fake out from here because the pressure is very strong and it's very, very steep. So you can think of it as a pressure sort of thing if it's very steep. And this is not a very good indication that we should actually go in for a buy sometimes, because even though it's very strong, we also know that for other indicators like RSI and for stochastics, it might mean that it's pushing it to an overbought situation because the buy trend is too strong. And if you're looking at assets like gold or something like that, there might be a sudden potential dip if it reached a very, very strong resistance level. So regardless, this steepness, to me, it just means that the pressure is very strong. And it can also mean a very, very bullish run if you're looking at a larger time frame, right? But mostly, if you're looking at very fast charts like gold, I would say it's a very dangerous sign. Okay, so the ideal kind of bullish sign is that in the middle, where it's a very strong gain, not too high pressure, and also not too so for the lines that are too flat, right? It means that the pressure is not strong enough, which means how to say, even though people are generally bullish on it, there's not enough incentive to actually go more to confirm that it's a very, very bullish cycle. So too much pressure is not good. Too less pressure is not good, which is why the 45 degrees is the ideal sort of situation you want to be in. But it's not in real life. It's always a range. So when you're looking at trend lines, too steep or too flat might not show that it's both not the best indication of the trend. Okay. So anyways, next is the break of an upward trend line. Okay, so the thing is, when you draw a trend line and the prices are above the trend line, you sort of tell yourself, hey, the upward trend is strong. The trend is remaining in a bullish cycle, and we should look for buy entries. Okay. However, there are circumstances where price suddenly dip below the very strong trend line that we draw. So in this situation, right, we should actually focus on monitoring this breakout from the trend line, whether it's a sign of trend reversal or whether it's just a fake out. Whether it's just a fake out from this trend line and the bullish cycle continues. Because we know that there might be news that day that actually cause a sudden dip in prices, or there might be just very big institutional trades that do a very big sell-off because of some internal stuff that actually go on. So we as retail traders, we don't know this stuff, but what we do is we focus on TA, right? But if there's a fake out, potentially most retailers, they might be the one on the losing end because one is they do not know if it's a change in trend, change in momentum, or if they're still looking at buy entry, then potentially if they're at a stop loss, this fake out may cause it to reach that stop loss before it continues its bullish cycle. So this is when we actually look and observe and be more careful in our trading. Guys, if I'm moving too fast or if I confuse you, please stop me and ask questions in the questions box. Okay, so I'll continue and I'll be monitoring the question box. Any comments any feedback will be welcome. Okay, so the thing is, the opposite is the same for downward trend. This is pretty straightforward. If it fakes out, so later I'll tell you so some people look at percentage movement above the trend line. If it moves a certain degree, then it shows differing trend reversal or things like that. But I would say nothing is for certain because I have seen prices that move very, very high up, but in the end, it still continue its bearish trend. So we can look for a few examples in real life charts later, and whether it's a fake out or whether it's a real. So the thing is, for fake outs, right? Another thing is you have to know that for different charts, it might tell you different things. So for example, on the larger time frame, on daily charts, there might be only a 1% fake out because it's just a small movement on the larger chart. But on smaller charts, if you zoom in to the hourly, it can be a very, very large movement. So which is why we emphasize when you trade, you go from a larger time frame to going deeper into the smaller time frames to see where your direction bias is. Yeah. Okay. So price and time filters. So how we actually filter whether it's a breakout or it's a real trend reversal is there are people who use the 3% rule. Of course, this is not forever legit and it also depends on which time frame that you're looking on. But in general, shorter time frames, they look at a 1% rule, and bigger time frame, they look at 3% rule for a breakout of the trend, right? And for Forex and commodities that we are teaching right now, we use 1% for long-term charts and 0.3% for shorter-term charts. So you guys can take note of this when you are doing your trading as as a reference, but do your own back testing. Like for example, for EURUSD, previously when there was a trend reversal or when there was a fake out, how much percentage was it before it actually really broke out of the trend line? So this is things that you consider, and you can also back test and calculate it for yourself. And this is a safer way to do it. But if you're lazy and you are generally a safer trader who mitigate your risk, I'll say 1% and 0.3% for short-term charts are okay, decent. And the 2-period rule is also a time filter which outlines. So the thing is, if you're very, very, very lazy and you don't want to calculate the percentages, right, you can just look at 2 candles. So if it's just one very, very long candle that goes above the trend, you might give it a bit of leeway. It might and stay out because it's very unclear. So if it goes above 2 different candles on the chart that you're viewing on, then it might be a trend reversal pattern. Okay. So breakout or fake out, and you judge for yourself. Okay, so breaking of a steeper trend line suggests the need of a deeper correction. So remember what I say, the ideal situation is that you don't want the trend line to be too steep, because the potential, when the pressure is very strong, the potential of breaking out is even higher. So the thing is, even after it breaks out of this steep line, right? Why I say you don't want it to be too steep is because after that, there can still be another trend line that you draw with the breakout, and the bullish momentum can still continue. So with trading, what we don't want the most is unclearness in the market. So the bad thing about the very too steep line is that it's very unclear, and the new trend line may prove to be more sustainable. So in this case, do we follow this or this? We are not very sure, right? So yeah, so I would say if this, right, for myself, if it's a chart like this, personally how I trade is I would not rely on this. I will rely on maybe a bigger time frame, and I'll draw overlaps. Okay, then this will be my stop loss. Then overall, the momentum is generally bullish. So I actually look for a buy entry at here, go up, and TP at about this level or this level, graphical swing high. So we know the general trend will be bullish, but I would not take I would just use the trend line as reference for momentum. So I will look for entry, but I will use it as a stop loss to say that, hey, if it breaks this swing low of the previous swing low, this will be a change of trend already. So this is how you actually find a setup potentially if it's an unclear trend line situation. Okay. Okay, any questions so far, guys? Hi, Ryan. Nice to see you. Hi, Jordan. Hi, Rachel. Nice to see you. I'm taking over Sitan today because he's sick. Yeah, so guys, best day ever. Anyway, okay, so adjustment of trend lines. The thing is, we look for 3 touches. What I said previously, we look for 3 touches, but there are circumstances where the prices suddenly become steeper, right? So in this case, we draw another trend line, and as a rule of thumb, there are 2 trend lines here, but we take the most recent one as our more fitting sort of trend line. So it's the same situation. I don't know if you guys use moving averages for your own trades, but and how you guys use your moving averages. But for us, how we use it is that we actually test the numbers to find the best fit. So the thing for trend lines is that we also test to see the best fit. So this might be a trend line, but this is the most recent one and it's the best fit. So this is the one that we use for our most recent trades. Okay. Okay, so fan principle. So remember, guys, after a break of a upward trend line, so this is how sometimes the chart pattern happens, right? But actually, guys, if this happens, I would tell you guys that this is potentially an inverse head and shoulders, right? And I'll wait for confirmation here. Then I'll go in for a short. And my short will be here, the same length as here. And my TP will be here. So trend lines are useful. I mean, so there are ways to actually look for trades. This sort of trend line, to me, if it's this kind of situation, to me, it will be kind of confusing, right? So actually, this is really an inverse head and shoulders, right? Okay, so this is not because it didn't touch here, but if there's a wick that touches here, can you repeat the second period candle you meant? Okay, sure. It's a bit confusing, right? Okay, let me go back to the previous slide. Okay, so the thing about the second two candle thing, it means that it shows you a way of actually telling whether it's a breakout or a fake out. So a breakout is, do you guys know what is breakout and fake out? Who knows what is breakout and fake out? Like, who doesn't know? Can you all post some questions so that I know whether I need to explain it? Someone? Thanks, Gary, for your question anyway. Okay, so the thing about breakout is that it's like a reversal pattern, right? You know that the trend changed already because it broke out from your trend line. The trend line is saying it's bullish, then it goes up. So 2 period rule, period is the candle. So if you're looking at a 4-hour chart, then one candle is 4 hour. So you will look for 2 complete 4-hour candles. If it is above and it doesn't fall, then it shows that it's a close of 2. Then it shows that the next trend might be going upwards. Does it make sense? I think there's a slide that explains this further later. If it doesn't, then I'll explain at the end of the slide. Gary? Like, what's the question that you have regards to the 2 candles? Second candle must also be bullish. Okay, I think it's very hard for me to explain it when it's with just later. I'll do a chart, then show you what happens when there's a breakout or fake out. But for me, right, the 2 period rule is very general because the thing is, it's like, how to say, it's a measurement, but it does not apply 100%. So even if I tell you that you look for 2 candles, it's not a for sure way of telling that it's because some fake outs can be very, very long and some fake outs can be due to news. So it's not very soon, but just know that like when there's a breakout, most of the time it might test the trend line. Then it will actually show that it will bounce back. It's a reversal pattern, or you go back to its bullish momentum. How do I explain it? I'll show you on live chart later. It's easier. Okay. But 2 candle is based on experience from Avrami's slides. It also depends on the charts that you're trading on. So like I say, yeah, it's not a for sure thing. Yeah. Okay. So breaking the 3rd trend line signals a valid trend reversal. Okay, so for trend reversals, okay, so you will see there's a breakout, right? What you can also do is that you can, like what I said, look for inverse head and shoulder, but make sure it touches. So just now it wasn't a valid one because it didn't touch the line, right? Make sure it's a valid inverse head and shoulder, or a double top, or a double bottom, head and shoulders pattern. I think those most traditional reversal patterns can also confirm when there's a fake out that it's actually, you know, a reversal pattern. Yeah. Okay, fan principle. I think it's good that Gary asked a question. If you guys have questions, you can post in. Then we're doing live chats along the way. I can actually cover if it helps to explain some of the stuff. Okay. So after a break of the downtrend, so what this will do is that it will retest again, right? So usually it will retest. So what happens in a breakout is that it will usually test the trend line. This is based on experience, that it will usually retest it. And because I trade on it too, so I know that usually about 70-80% it retests the trend line. If it's a very strong one, it will retest. So what if it continues moving upwards, actually, to me personally, and if it goes above this level, right, to me, it shows that it's a trend reversal already. So, um, to me, like this is how I detect it. I usually don't draw more trend lines because to me it seems a bit like not so essential. Yeah. So after this, if it goes down, means that the bullish trend continues. So if there's 2 candles down, means that bearish trend continues. If it's 2 candles up, to me, it's like, oh, it's a trend reversal pattern. But yeah, like I said, it's not 100% of the time. So, and also like on different time frames, it's different. So I think it's better for live examples. So the fan pattern is just like, oh, 1, 2, 3. So you guys see that on here, right? The proportion seems very nice. 4 candles, then you draw 1 more, you can draw another trend line, you can draw another trend line, draw another trend line. But in reality, is that all candles are of different lengths. So when you try and draw this kind of fan patterns on live charts, just be careful because it's not that easy. Yeah, up and down. It's not like, so symmetrical. So fan pattern, only when you see it, potentially it can be a trend reversal confirmation. Okay. So yeah. Okay. So the second type of, so the bullish price channel, I would say is actually built on trend lines because the bullish channel is just 2 trend lines. But the thing is, if it's a channel, right, it has to be parallel, which means the higher lows and the higher highs are actually symmetrical, and it's in what is this, parallelogram? Yeah, parallelogram sort of shape. So this is where you know that it's a channel. And again, prices won't be so symmetrical and so nice for you. They will be like that. Then, but how from experience, what makes it a legit channel, right, is that you have to make sure that firstly, there's 4 touches, at least 4 touches on the channel. If it's a very strong one, it can have so many touches, but at least 2 touches will be good. 2 on top, 2 on the bottom. Then when you draw the channel, it's a parallelogram shape. That makes it actually a legit channel. This is like the professional and the atas way of saying it, right? Uptrend channel. But just remember 4 touches, uptrend, bullish, 2 touches on the top. It doesn't have to be symmetrical. It can be 1 here, maybe 1 here, then 1 here, then 1 here, that kind of thing. But it will be a legit channel. So yeah, real life charts are not so perfectly drawn. Just remember that. Okay. So bearish trend line, same thing. 4 touches. The easy to remember way is 4 touches. Okay, doesn't have to be perfect. Like you can be here, 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 and then you 4 touches, and then it's a legit channel. But channels, trend lines, mostly used for momentum. We use Fibonacci's mostly to find confirmation within the channel to look where prices might go again. So for example, if this is in the channel, I know, right? How I actually do a setup is I'll look for overlaps. Previously price test on this bearish channel, the what is it? The side, okay. The side of this, the return line of this channel. And so I will probably look for a short entry here. This is an area I'll look for a short entry. And because the bearish momentum is strong, I'll look for a short entry and I'll potentially go in here for a short LTP at where prices have tested it previously here. It can potentially go even lower, but a safe choice of TP is actually at this here. And a stop loss usually I'll place at the last touch, the previous touch of the channel, because if it goes up again, it means that the distance of the breakout is the same level here already. So usually I'll put my stop loss about here. Of course, there are people who can tolerate more risk, and this can also go up to be potentially further up to be a double top or something like that, right? So there are people who put it at the next one, stop loss. It depends on how you mitigate your risk. And yeah, it depends on the trading strategy. And guys, I know people say you have to look at your risk to reward ratio, blah, blah, blah. Okay, so yes, you do have to look at your risk to reward ratio. 1:2, but the fact is that it's sometimes fine to have a 1:1 risk to reward ratio as long as you mitigate the stop loss and your entry level, right? You're risking less than 1 to 3% of your entire account. So your stop loss is just to give you leeway if you believe that the bearish momentum is very strong. Give you leeway in case there's news or whatever that drive the price to a very high fake out above your channel or the trend line that you're doing. It gives you leeway for a return and it will continue to your TP. So this is what this is one of the trading style. I like to do a bit of range trading, which I calculate the maximum stop loss I can tolerate. Then I go in for the lot size. So yeah, just something I want to mention when you're doing your trades. Okay. So yeah, downtrend, how you find a potential setup. Later I'll show you more. Okay. Linear regression line. Okay, let me draw this. So linear regression line is also another way to find momentum. But I think this is in real life, we actually use moving averages more in terms of finding the linear regression line. So how many of you guys know the what is it? What is the indicator name again? I can't remember. The one that has what is the name? Okay, so the one that has 3 lines. I think Avramis yesterday, if you guys were looking at the slides, a lot of indicators function this way where there's a middle moving average and there's also like a top moving, there's a line above and a line below. So there's 3 different lines usually, okay? So I have a bad memory, so I cannot remember the names of different, but I know that it functions like that. And so I think the linear regression line actually works on the same thing, works on the same sort of principle, such that it cuts. So it's a line that cuts through the momentum, right? So it's like an average when you do a cut of the price. Like I said, price is more, moving in whatever way that it's moving. But the ATR, the linear regression line, is just cutting through to find a middle, right? To find the momentum. Okay, let me draw this. So this is like a parallel. Then you actually draw the top line and the bottom line. And so if price is really in this very perfectly, upward trend, you know that this line is actually a third point of how you draw graphical overlaps. So what I mean is that, see, if you draw a graphical overlap here, right, it cuts through this point. So potentially, you know that this price level is where you can actually go in for a long. It helps you in finding your graphical overlaps, potentially how this can be used. So see, this is where this area is where price actually cuts through this horizontal place, right? So you know that the price level you can enter in for a long is here, and potentially your stop loss can be placed here, a very tight one. Then if you go for a very good long, I mean, this can be your first TP. You wouldn't know, right? So this can be your first TP because this touches this line again. Then you can go for a second TP here because it touched the channels line here. So this is a way that you can actually go in look for potential trade setups. But like I said, it depends on the chart. If you see a chart pattern that is similar to this, that's very, very tidy and very neat. So see this area previously when price tests this point here again, where you go in for a long entry because you know that it's in a channel previously. It's a very good channel, very strong channel. Then you go in for a long. First TP where it cuts here, second TP where it cuts the ascending trend line. Any questions for this, guys? Does it help? Is it confusing? I mean, some support would be nice. I feel like I'm talking in a room to myself. Okay, I'm just trying to show you how you can potentially find a setup if you draw a linear regression channel. If you guys, it's not your trading style, then it's okay to, yeah, so, okay. So drawn 1, 2 standard deviations above the linear regression and a line parallel to the linear regression. Usually for lazy people like me, we just draw a parallelogram, but this is like the most professional way and how those algo people usually program it as well, I think. So yeah. Okay. So okay, so this is like a fake out or a breakout that dips below this upward trend line. Okay, so as prices advance and trade within the channel, the trend is a break with the would be bullish and indicate an acceleration. First warning of the sign changes out. Fall short of the return line, a break below the trend line support will prevail. So remember just now we were talking about how that might be a breakout, fake out. So channel lines are the same as trend lines. The same principles of 1% or 0.3% applies. So the thing is, if you consider this as a trend line, right? In when you do the similar fan shape, or if you find a similar, this is another inverse head and shoulders pattern, right? This is a head and shoulders pattern, not inverse. This is a head and shoulders pattern, right, guys? So this is actually a confirmation it's going to be a short, by the way. If this is really so legit, yeah. So personally, I'll use other trend chart patterns to confirm, but so this will be a short. And yeah, so a break below the trend line support will provide indication of the trend. Because this is a very proportionate sort of a chart pattern, I would say this breakout, but I will also observe this chart pattern, head and shoulders pattern for the confirmation. So this I would say might be 60% right, 70% right of the time. So I think the way that I taught you guys just now how to use it to find setups would be a more decent way on how you can look for potential trades. Yeah, but this just 2 small candles might go up again as well to retest. So sometimes for head and shoulders pattern, right? You also have to confirm with other stuff because a short might actually, yeah, that's my pen. Sorry guys, let me find my pen. Okay. So the thing is, for head and shoulders pattern, sometimes the short can actually occur here. So it can climb up a bit to a graphical overlap, right? And then or retest this channel and go down. When you're so the thing is, this is a head and shoulders pattern, right? And this is a channel. So what I think prices might do is they can retest this trend line or actually the channel, and then you can look for actually a better entry here. One entry can be here. You can do a half entry lot size here for a short, and then you can go and see when it retests. If it retests the trend line, go for a second entry in here and look for a short. And your TP is the same length as usual as this. So you can draw a downward arrow here and you measure how much you're going to short for and do a TP. This is how you trade on together with channel lines and also confirm with other chart patterns. Okay. So yeah. Okay, channel lines. Okay, so as long as price decline trade within is considered bearish, yeah, as usual, fake out. I'll take it as with a pinch of salt. I look for confirmation. This is very good, definitely, when you know it's going up. But the most confirmation comes together with your Fibonacci levels and your graphical overlaps, and also like just now what I mentioned, the chart patterns. So this is an inverse, and of course, if what I said was true, this will actually retest, and even if it retests, it will go up. So how you know that, so even head and shoulders patterns might be wrong. So how you know it's wrong is that if it comes down and dips further down, then your stop loss, if your stop loss is around here, like you can put a stop loss around here to know that, hey, this level, nothing works 100% by the way. So you can put a stop loss here to know that if price dips above this shoulder, dips below this shoulder, right, then you know that this is continuation of this channel pattern. So Gary, I hope this helps you. I think this is better if you're looking to identify breakouts or fake outs. I think it's easier than if you do a straight right, 2 candle or do a percentage, because yeah, it's very hard to say, put a numerical figure and you always calculate and say that it's always going to be accurate, because you're going to be very tired most of the time, and sometimes it's not going to work that often too. Yeah. Trend line of different degrees. Intermediate. Okay, so the thing is, just now we were talking about on bigger time, there might be smaller trend lines, right? So if you're trading at this area here, I would say that your more applicable trend line should be the one that is closer to your price currently. So remember just now we were saying how a new trend line is more, the bigger trend line will sort of tell you the overall momentum. So how do I explain this? Okay. So when we are here, right, for example, we don't know what's happening behind. Most likely, most people will try and aim for 3 touches. So firstly, we'll draw this trend line, right? But if we are actually here, we actually see that we actually draw the trend line this way, because it's like a sort of a bigger horizon to show a stronger bullish momentum. But within the smaller cycles, you might find potentially small breakouts as well. So I think this is applicable if you go in from daily to find the general trend, which is a major trend line. This major trend line will be more reliable to find, to craft your strategy, whether you're going to find a buy entry or a sell entry. I mean, some people play both ways, but the major trend will tell you what the general trend is. And then if you zoom in maybe after that to the 4 hourly or the 1 hourly, right, then you might potentially draw smaller trend lines. And even on a bigger time frame, this is why they say even on a bigger time frame, there might be people, if you're looking at the same chart, right, there might be people disagreeing with each other, because on a bigger time frame, it might be very bullish. But if you're just looking at this small trend here, you might be bearish because it's a breakout, right? So you go in for a short from here, then you play to this level. So it might be a short, even though the overall trend, people say that they are bullish, but they might enter in for a small short here. So yeah, when you do time frames, just remember that trend lines on bigger time frames are different from trend lines on smaller time frames. And the smaller time frame always, always respects the bigger time frame. Yeah. Any questions? Okay, so the thing is the measurement of the vertical distance of the trend. This is the same as how you measure the degree. I will not cover so in depth, but you can roughly see how it's calculated. So this you would have to rely on a lot of math and technical stuff. So some people use it as support and resistance, but for me, I like to look for graphical overlaps. If you guys want to see, you can see how it's calculated. Yeah, I I don't usually personally lah. Like there are a lot of things around there, but personally I don't use this for most of my trade. But if you guys want to know like how this works, you can actually see ATH, ATL. So when you minus the price 2000 minus where it was at here, then you can calculate that it's 120. It measures the distance and then the proportion of how steep actually the lines are, and then yeah, it can also be sort of like the support and resistance within the trend. Okay, so yeah, so this is the last of the slides. Guys, what charts do you guys want me to do on? Then I can show you some of the ways you can use trend lines. Anyone? Let me see. Gary, what chart would you like to? Is there any chart that you want to look at? If not, I'll just go to a default one. Maybe say, I'll go to a default. Maybe I'll go to. Let me just go to. What is the recent? Okay, I'll go through a list then. Okay, AUDJPY. Okay, let me do a new chart. Okay, so AUDJPY. Guys, do you guys have any requests? I can take requests and do trend charts. It's quite quiet. So you guys see charts are messy stuff. They're not very always yeah, let's do gold. Okay, I love gold. Okay. See, for gold, right? The trend line that I have been drawing very long is this one. Okay, so if you look at the trend line from bottom, so first thing you have to note is that trend lines are subjective. One person might see this way, there are different ways of interpreting the trend lines. So remember I say that you can actually cut a bit of the wick. So this can be a good trend line on a daily chart. Like what I said, the smaller time frames always respect the bigger time frame. So on a bigger time frame, on the daily, a trend line can potentially be like that, right? So this is the upward trend line. But if you want to draw, it can also be this way. So it can be a potential breakout already, where indicators are showing that it's turning bearish. Yeah, I'm right. Indicators will be showing that it's bearish. So how are we going to measure this way? Like just now we were talking about 2 candles. This is like, how are we gonna, say that this is really a breakout? What if? So what we can do is that it actually retested it already. So it didn't actually dips below and retested it, but there's so many candles that were touching this trend line, which is why I say it's very hard for you to actually confirm, because even if on the larger time frame there's a few candles that are touching, right? You can see that here it tests, it drops, right? But it retests again this trend line. So are we going to say that it's continuing this bullish cycle, or are we going to say that it's bearish? So it's actually based on back testing and how you go. So actually this trend line is quite strong for quite some time, because firstly, it adheres to the bigger time frame, right? And then secondly, there has been many touches after a few days, after in a period of, this entire long stretch, there has been many touches, even though a few cuts. we can see that this trend line is very, very strong for gold. Okay, so potentially, okay, so remember just now I say that other than trend lines, right? What actually supplements the trend line is that you can look for reversal patterns to confirm that what you think whether this is. So if we're at here, what confirms our beliefs is that it's actually an inverse head and shoulders pattern. And I told you guys that most likely prices tend to retest the trend line again based on experience. This is based on experience. So if you spotted that there was a breakout from here, right? And it's actually forming this pattern here, you can actually put a sell entry here because you know that it's going to retest this trend line and go potentially for a short. And where your TP is the same. Okay, wrong. Sorry. Okay, so this is actually not a inverse head and shoulder. Guys, ignore what I just said just now. Sorry. This is a failed version of the head and shoulder. So to say that chart pattern is actually wrong. But the thing is, I would have put my stop loss here and then I would have been stopped out. So guys, guys, just ignore what I said just now. What am I talking about? Okay, so the thing is, I would have been stopped out if it's a wrong, because this is a case of wrong inverse head and shoulders. There was a long towards the trend line, but then it did not actually move all the way up to continue its bullish momentum. So it's good to actually TP here for the first TP. Then the second TP to the full head and shoulders, I did not. Probably you should not have taken it. But because it actually went down below this, it's actually a confirmation that it's actually going downwards. So we are actually in a new trend, which is a bearish momentum trend. So this is actually a situation of a breakout. Yeah. And gold is a short now. So on the smaller time frame, we have broken out from the bullish trend line, and also because it's a breakout, then we can see that the bearish trend is going strong, and we're looking for short entry. And this is a sell entry. Sorry guys, please ignore what I said just now. Kind of made me it was a breakout, and then right now we're at bearish momentum. And yeah, so you should be looking for a short entry. Sometimes my brain doesn't work. Okay, so yeah, so it's actually a bearish trend line, and a graphical overlap is here. Okay, so it was a breakout from the bullish trend line. The graphical overlap is here. Okay, and it's here, here, here. So it's about, I think it should be lower here. Yeah, the short should have started here. So guys, if you guys are trading on gold, today the momentum is most likely to be bearish. Okay, and the short will have started because there's a Fibonacci, area of Fibonacci confluences here. Okay. So then your TP would be around here. This one is not applicable. Remove. I would TP at about probably a bit low, a bit higher. But look for graphical overlaps. I'll probably TP about here. Okay. TP about here at the 50%, okay? And then I'll put my stop loss about here. Because it's a bearish momentum. It was embarrassing. Okay, so anyways, this is a bearish arrow key and 50%. Your stop loss is put here because it was the recent swing high. This is a trend line drawn on the 4-hourly. The bearish game is strong. Ichimoku is actually showing bearish momentum, right? Okay. Red crosses above blue, which means it's very bearish. There might be within it, there might be other smaller plays in here. But if you are someone who plays on the higher time frame, you will look for more sell entries than buy entries. And how you see Ichimoku, you can see that at this level, previously price has tested this many times for the overlap, and this is potentially a sell entry. Anyone has any questions for this setup? Sorry for the brain fart. Okay. So anyways, are there any charts that you guys will still want to look at? US oil. Okay. Okay, let's look at US oil. Yesterday, me and my friends were looking at UK oil because it was zero spreads on one of the broker platforms we were using. Okay, and we were looking at overlap. So what we do is we go on daily. Daily is okay, because Ryan's so nice, I'm gonna like do a full analysis of it. Okay. So right now we have retested this. So on daily time frame, right, we do all fibs. We're at about 38. Tested this. If it's bullish, it's probably going to 61.8. If it's bearish, then it'll probably go to 23.6. So let me do this quite fast. So I was asking my friend whether this can be considered a double top, because double top does not have to be completely in alignment. So, but there was a very big short here. Ryan, I don't know if you shorted from this area down. There are people who actually shorted it to the Ichimoku crossover here. From my colleagues. So they were looking for a bounce from here. I would generally say the trend is bearish if you're looking at 4-hourly. Bullish. And I would potentially, let me draw more Fibonacci confluences. Okay, so make it more. If you went in for long, right? See, this is what I mean by trend lines not being very. On the daily, I see bullish trend. Okay, but the trend is the trend line is very hard to. Okay, so I'm not going to use a trend line here because it's not very useful to me in these circumstances. I'll use the crossover for Ichimoku. And so if you're going for a long, I think potentially a TP can be here. Yeah, this was where price has reacted a bit last time also. And it's 50%. So if the movement is generally bullish, right? Ryan, short-term bullish, like higher TF retracement. Potentially, yeah, potentially. I don't know where you're entered though. If you're entered here, it's good, but I think there are people who entered here because there was a swing low here. So I think potentially that could have been people who entered here. Like this is the best entry, like the crossovers. So secret guys, crossovers or Ichimokus are very good entry levels. In case y'all don't know, I think most of y'all would know lah. This is what I discovered by myself also. So, but this is overlap, so it would have been a good entry also. People would have spotted it even if it's not Ichimoku crossover. Okay, so this is a good long. If you're going on hourly and draw more Ichimokus, more retracements, this will definitely be a level you will reach. You see so many confluences. If you draw a Nike tick 127.2, where prices love to bounce to 127.2 if you all do retracements. Something I learned also when I was trading, when I do back testing. Okay. See the bigger time frame, 50%. It didn't even test the 50%. So and then it's retracing back, right? So I would see it depends on which time frame you're playing though, Ryan. Like I know it will definitely reach here, then there will be a reaction. If you're shorting, right, then this is a good level to watch for also. 73.373. Oh, nice number. Okay. Yeah. If you're doing smaller time frames, I think there will be more retracements here. 60. Okay, no, this doesn't work. Yeah, see, this is also about 127.2. To be honest, I'm more bullish on this. I think potentially it can climb. If you want to put a stop loss, right, I'll put it here. So if you went in for long, there can be continuation. This will be an entry, right? So you can wait for retest to the entry, right? To actually, it can be an area. So it can be here, this area for entry. For a retracement to this entry. All flips. Yeah, okay, so this is level to watch for. Retracement, we're at 61.8. I don't know if you retrace so low, to be honest. But there will definitely be a dip a bit. See if you want to play like the $1-2 towards this level. But overall, I think the overall trend is bullish. So you should look for buy entry more than a sell entry. And if it goes to the 38.2, the 50%, the 23.6, the best situation, by the way, you can look for entry to go long and to TP at 73.7, about there. Guys, what do you think? Are you all bullish or bearish? Sorry for brain fart just now. I don't know what happened to me. But yeah, I'm just like that. Okay, so anyways, this is how I will play it. Yeah. This I would say bullish continuation. I think there will be a retracement, definitely. Then you can look for smaller time frames to see if there's any further dips towards this area. Then you look for a buy entry and you go long. Then it'll be a very nice trade, I think. Yeah. Any questions? Okay, I went over time. Thanks guys for actually staying with me and listen to me, and we all learn from what we trade, and we hope to share more knowledge to people. Usually I do Monday, Wednesday, Friday. Usually it's Shiteng who does the Tuesday and Thursday. So I hope you guys learned something from the session today, and also guys, trade safe, stay safe, stay away from COVID. Hope you guys all stay healthy. And I'll see you guys next time. Bye-bye. Thank you, guys. Bye. Bye, Yok. Thanks. Bye, Gary. Bye, Ryan. Thanks for all your requests. Those new people, welcome. Hope you guys can post question inside too. And yeah, hope you guys all unloads from this gold trade, this oil trade. It's not bad. Okay. See you guys. Bye. Bye. Thanks, William. Bye. Bye, Son. Bye, Sek Bye. Bye.